Testing 1 2 3. Testing 1 2 3. The rain in Spain falls mainly on the plains. Yeah, everything's failing, so sorry for the delay. Tried to do this webinar outside, didn't work. I'm back inside. Now this is not working, so just trying to get that up. Sorry. But let me remind you that trading is risk, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Okay, we got sound, we got eyes on the prize. Can you see the disclaimer? Yeah, all right, so I was going to get funky with it, and the world punishes funky people. They have beautiful hair but bad teeth. So anyway, let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Be small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We appreciate you. If you are new to these webinars, I'm here to help and guide and teach so that you can become a successful Forex trader. That's it. That's why we're here. And if I earn your respect and your loyalty, please show it by going to TradersWay.com and joining the family at TradersWay, and you get a diamond of your own, diamond in the sky. Diamond in the sky. So anyways, I do these sessions every day, 7:30 in the morning, Monday through Friday here at Forex.Today. Forex.Today! First Friday of the month, I'm over at FX Street for Trading on Farm Payrolls Live, which I've been doing for about 12 years. Joe wants Kiwi dollar. All right. I don't see a problem with that. Alouette, ton gentil, alouette, alouette, ton gentil du pays. Je te le All right. Is that what you see? That's what I see. So if I was a bear, I'd sell here. If I was a bull, I would have bought here. Next. I mean, I would have even had my eyes on this. So it really depends on the timing. But my stop certainly would have been below the cluster, right? Definitely below the cluster of the two central pivot points. You draw like head and shoulders hour. See, that's a classic example of people forcing heads and shoulders into things. No, I see what you're doing. I guess I wouldn't do it that way, but I suppose, I mean, it ends up being the same thing, but I feel like you're forcing that pattern into something. Okay, the head and shoulders should have taken place up here. All you're doing is selling a previous resistance. I guess you get a shoulder out of it. I mean, yeah, all right. But the thing is, what's more important to me is that it made a lower low. Okay. If that's your plan, I'm fine with it. A bull would disagree with you, and a bull would buy it down here, like Like, it's really obvious, right? A bull would have bought it here, and you can see their plan is to take it north for a very long time. So you better enter properly and have a place your stop properly. If you're going to head and shoulders this, you're right, there's your resistance, and you need to get through this support on the way down. Okay. Okay. So it's been up for 4 weeks, 3 weeks. Certainly, okay, let's say 3 weeks. It's been up. Okay, you can highlight the trend this way. Can't see. Oh, maybe here. Yeah. Okay. Okay. You want to do it that way? Someone might argue it's not bearish yet. There's the issue of this or this is the previous high, but that is higher. So there's still a reasonable interest from bulls, I would think. This is definitely a bullish area to buy. So I wouldn't be incredibly eager to sell right away, but you can see, like, for very obvious reasons why that's a great place to consider selling if you were to sell. But I still find it sort of like you're picking a midpoint in here. Like you're trading it off the central fork, right? It's kind of what you're doing if you want to do it that way. Well, that's why you're waiting for a roll reversal at the center. But so I don't know if you're right or wrong here. But it's been up more or less for 3 weeks, and you're waiting to sell now. It's like, did you sell in here? See, at least you had weekly and monthly resistance. So I don't know, it could happen. But now you're thinking, I mean, this is the only place you could do it, right? So yeah, I mean, if you're hell bent on selling an uptrend, that would be the place to do it. Is in here, and you're going to call it a lower high. Just don't call it a head and shoulders. I mean, that's not a trend, bro. I mean, you want a head and shoulders at the end of a very steep trend. Okay, so if you're going to go right, so if you were a bear, this is a pretty obvious sell. Weekly resistance, monthly resistance. Would have been aggressive, but it's definitely a take profit zone. And then the lower low, this low here being lower than that high there or whatever, then yeah, okay. Okay, sure. Yeah, that would be the right thing to do it, right? But, again, I worry that you're eager to be a bear in an uptrend. And that's usually on the long run a dangerous thing. I'd rather you still be bullish and lose money than be bearish and make money, because what happens is you get in the habit of selling uptrends and buying downtrends. And it's easy to get unlucky on those. And trends, it's easier to get lucky on, right? So. Well, most people find selling in an uptrend easier. You know, it's an interesting, it's an interesting question. Like, why, right? Why, that I don't know, but it's maybe in human nature. Let's just do that. So I don't know. Yeah, if you're going to sell it there, just don't call it a head and shoulders. I don't know. Like, maybe Daniel, but I think it's more subtle than that. But it is common, and I'm not saying I haven't done it myself, right? It's just, yeah, I don't know. But if you're going to trade it as a reversal, you have permission to do it, and that's just part of your bias, right? That's valid. Right? That is valid. Depends on how you want to draw this one, right? So let's get off that for a second. See, it's still quite dangerous. There's still going to be bulls on this. And if they drew it this way, this is a 618. So I could see that just as many people want this to go north, right? So imagine you're looking at this on a 4-hour. You're at a 618. You're at a cluster of weekly and monthly central pivots. And what does that oscillator tell you on the 4-hour? Does that tell you like an uptrend is coming or a downtrend is coming? Well, see, it doesn't really tell you up, but you certainly can think up. I prefer up when this is in the trade zone, okay? So at the very least, if you're a bear, you're very, very, very late. It's kind of really what it's telling you. So like it could just keep falling and it just stay oversold, okay? But a bear would probably, a bull would probably find that reasonably attractive and say, all right, higher high, higher low, higher high. We're not going to make a lower low. We're at a bigger 618 on a daily. And we're at a cluster of obvious support. It's a buy. It just is. And it's probably the people that took profit here. So that's why, like, I'd rather you sell at the pivot cluster, monthly R1, weekly R2, than catch it, 16 hours late. Because you're in the middle. You're kind of trading in the nomad's land, right? So, yeah, if you're a bull, buy it low. If you're a bear, sell it high using support and resistance. And we don't know who's going to win this battle. It's 50-50. Someone will win, someone will lose. Just make sure you got your stops placed properly, right? Well, yeah, so there's the question of the Kiwi versus the dollar, right? And Pinko says, well, wouldn't you be better with trading it against the yen or something? Well, if you're selling, you're bearish on Kiwi. And you might be bullish on the buck. You're thinking Kiwi yen long, probably. And this wouldn't be that setup. So they're just they're going to be bearish on the Kiwi. Okay, so it's just that. Now, I pointed this out a few weeks ago, maybe even a month ago. I said the sleeper trades are going to be the Swissy trades, and that it's going to happen. You're going to be squawking about the yen, squawking about the dollar, and you're going to miss the Swiss franc. Does anyone remember that? I think it was just a one-off webinar. I don't need to bring up too many pairs, right? There's enough going on the dollar and the yen, but I said you're probably going to miss it. It's going to be the sleeper. And so anyways, let's change the template. Oh, damn it. I just sold it. Just, whoa, whoa, whoa. Hey now. There we go. See how easy trading is? Trading's hard. No, it's not. I accidentally trade all the time. All right, let's try this and change the template. Yeah. Trading's so hard. No, trading's easy. Profiting is hard. So check this out, huh? Bottom. So what have I taught you? This goes back to our conversation, I don't know, 3 weeks ago, where I said there's one pattern you can practice over and over and over. It's not a magical pattern, it's just a pattern. But if you practice it over and over and over, even if it never shows up, you're going to at least have patience and discipline, which are, we all agreed, keys to success. So at the very least, get patience and discipline. But if you do get these patterns, and you can start practicing them and measuring your success and all kinds of things. Does anyone remember the pattern? Obvious support and resistance, followed by what? Breakout retracement. Call it whatever you want. Here says 1, 2, 3. That's fine. I accept that. Right? Not a head, shoulders, Chuck. Gee whiz, Chuck. Chuck, go sit in the corner. So anyways, I'm calling this support. I'm going to call this resistance. Come on. I guess, oops. It's funny. It's insistent. There you go. I'm going to call that resistance. And it's the same trade now. It's Kiwi Swissy, not Kiwi dollar. And it's not Kiwi yen. It's the same trade as Kiwi yen. So anyways, we're just stuck with Kiwi. What do you think? Tradable? Yeah, but you're collecting double interest. Remember, New Zealand is paying you interest, but Switzerland's paying you interest. Switzerland has negative interest rates. They pay you to borrow money. Right? It's like the bank paying you 1% per year for your mortgage. It's crazy, right? No, the reason you're not concerned, and this is going to really blow your mind now. Oops. I just messed it up. Where's the actual entry? No, don't say support. It's specific. No, give me a generic answer with a specific answer is available. Monthly M2. So where are we going? I mean, that's why we consolidated here. So where are we going? M4. So am I concerned about central pivot? No. Why would I be concerned about that? Because we're going here. Right? Yeah, it's not an opinion, right? It's not my opinion. I don't know where the hell it's going. It's just that's that. You know what matters is the bearish opinion. They have an opinion. That opinion says sell here. So maybe if anything, they're selling the red zone and we'll bring it back down to M1. That might be happening. And it's like kind of like I showed you, I think yesterday on a pair, it went through the weekly target, but not by much because the monthly target was also nearby. So it went through the weekly target, hit the monthly, then dropped back into the weekly, then lower high, lower low, and from there. And maybe it's playing that a little bit. It really depends on what happens next. If the bears fire for effect here, then it'll drop. But the thing is, I don't see a lower low, do you? It's either a 786, right? Or it's a 618. We don't really know. It's an opinion. Or it's just 50%, depending on what time frame you're on. Because if you're on a daily, it's going to be closer to a 50%. Because your fib's going to be different, right? From that low to that high to this low, it's 50%. So, you know, there just might be bulls left in this. And in that case, where are the bulls going? Okay. That's what's projected here, or predicted. This bottom at that pivot, a range of this for the entire month of September. There's your wonderful head and shoulders. So that's what a bear's going to think, right? Here's your head and shoulders. It's actually a crown if you're going to trade it that way. So if you're going to trade that, you need to be setting something up like right now, bro. Right now, bro. Okay. You know, if that happened, fundamentally what's happening is North Korea blows up a nuclear bomb in the middle of the Pacific Ocean. The neckline is this way. That's why it's a crown, not a head and shoulders. Okay? But I have never seen like harm drawing the neckline this way. Because what I think you'll find is it'll do this, this, this. Okay? Because now, let's just say it's difficult to reverse a market, okay? So, Swissy weakness is positive. What I mean by that is the Swiss franc is a safety risk off currency. It's supposed to be a funding currency. So when people are not funding things, the Swissy gets strong because demand is weak. Okay? Well, no, I should say it the other way because it's a fun. I mean, demand for funding, which means it creates weak. All right, let's say this differently. When you're afraid that the world is going to end because the sky is falling, you seek safety for your money. You take it out of risky investments And risky doesn't have to be like crazy, just you're making money because you're assuming risk. So anyways, you got your money spread around the world. You have interests and concerns, you know. So anyways, all of that can fall apart very quickly because the sky is falling. So you withdraw those investments and you want to protect your money, so you put it in your Swiss bank account. Demanding Swiss francs, Swiss franc gets strong. When the world is safe and risk is low, you got to put your money to work. Because if your money's not working for you, you need to go work. So rich people take their money and they invest it, and their money makes money while they sleep in every day and take tennis lessons, right? What did you do today? Oh, I made $1 million and I played tennis, right? So their money works for them. So they want to deploy that capital quickly, right? So when the world is safe, they go and they invest here and they invest there and they invest, and that means demand for Swiss franc is low. They're selling Swiss francs because they're converting it into the investment currencies, and therefore Swiss franc should be weak. Like I told you yesterday, the dollar should be weak if things are good. So if this Kiwi Swissy collapses and we spend the rest of the year falling, that's bad. That's like bad. That tells me the sky is falling. So that means what would cause such a stir for trillions of dollars to trillions of dollars in investments to be dissolved and money flowing back to Swiss bank accounts for safety. Yeah, all right. North Korea detonates a nuclear bomb in the Pacific Ocean. That would do it. But if you don't think that's going to happen, then this is going up. Okay. And when did we speculate that this downtrend from here down would end and the Kiwi Swiss franc would go up? When did we speculate such a thing would be plausible? No, not even plausible. When did we speculate we could start looking for it? Third week of August. All right, well, let's go do some fact checking here. Third week of August is here. Can't quite tell. It's this one here, right? See how hard this is? This is difficult. So that's Kiwi. I just want to throw it out there. Kiwi, Swissy, something to look at. I said, I'm not going to make a big stink about it because, yens are easier, dollars are easier. But like, the reason Swissy is interesting is what if you bought all the yen pairs? Do you buy dips on the next pullbacks? Yeah. Or you just roll over and do Swissy pairs. You're long all the yen pairs, long all the Swissy pairs. The correlation should be close to 1, because I believe these types of trades that I set you up on are global macro trades. Thanks, Marina. Pretty fly for a white guy. Yeah. And look how white this guy is. Wow, huh? Look at that. The other day, I had my Harvard Crimson golf shirt on. white pants. And I have a pair now of crimson Nikes. And an African American woman came up to me and she's like, "Oh, look at you." And I'm like, "Hey, baby, I'm trying. You're pretty fly for a white guy." I'm like, "Oh, snap. That's like, oh, bring it in. Give me a big hug." It was pretty funny. Yeah, it was great. Yeah, boys got style. It was like ultimate compliment. Yeah, crimson shoes, white pants, crimson shirt, like all matching and stuff. Like, whoa! Yeah. It was just funny. It was just the ultimate compliment. She's gonna. No, pretty fly for a white guy. Anyways, it was pretty funny. My wife's like, "What was that all about?" I'm like, "Really?" Yeah, retired supermodel for sure. So that was a great compliment, though. That was great. Dollar pairs. Follow up on Fed, I guess. Brooks, whoop, whoop. Okay. So it seems to me we've already identified support and resistance, but let's update the chart. Okay. Yeah, it seems to me we already did this. Seems easy to me. I guess you're going to have to add this if you're going to trade, but I don't like mid-level trades. So I did this like a week ago, maybe even further out. It might have been here that we did this. I was speculating this one. Look at the reset off the 200 though, huh? But look, there's support here, so you would buy down here, wouldn't you? And the resistance isn't up, right? Is up here. This stuff I don't like because there's bigger support resistance. Unless you're really aggressively thinking this is turning down, then that's cool. If you really, right, if you're going for this move here, the old man move, then that's cool. Yeah, we're right at the spot where you'd consider it. So you want to take that turn. Looks like you've already had it. So you need the follow-up trade here, and you might have already had that. So if you're still not in it, I guess you're waiting for the stock market open. So there's, I mean, like, look at it. Let me do the micro trade here. Let's just do the micro trade. Let's do it this way, and I'll get rid of this because that assumes you already see the obvious, right? So you know what? Instead of drawing it that way, let me just use my handy dandy notebook. Okay, this one. Okay. Yeah. What is it that I've taught you to do? Okay. Right? I would be worried about that somehow. So if we get down here, the funny thing is, my spidey senses tells me we're not going to hit the weekly like you think. We're going to get down to this first. And I don't know if there's a psych level in there or something. What is it, 1950? No, I don't know. I have a feeling we're going to get close, not hit the weekly. And then, and the reason for it is, this is a 15-minute chart. What about the guys on the hour and the 4-hour? They don't see this move. So they're going to need the candle, and then they're going to need the retracement. So I'm going to draw that with the red, okay? They also want this, but they see this as one candle over the course of 4 hours. What? So what do they want next? Okay? They want a Fibonacci retracement. And that's how you get to the weekly. Okay? Another way of looking at it is they don't see your double top, so they're still looking for a double top. You could discount it here and here if you want to do it that way, right? So if you're on a 15-minute chart, you see a double top. If you're on a 4-hour chart, you only see a candle. So you'll get a double top maybe on Monday, maybe later today. But they're looking for the same thing as you, just on a different time frame. So the market will probably give it to them. And that's where if you're going to trade smaller time frames, you have to understand that you're going to get your double top, then the drop, and then up, double top again, and then a bigger drop. Okay? And what new traders, I think, tend to do a lot, oops, put that back, good. I think what new traders try to do a lot is they sell, 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 yay, and then what? Sell, 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 and lose, 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 right? So then you're like, oh, so it's long. So you buy, oh, this is supposed to be this one. Buy, 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 buy. You know what I mean? And then you're like, son of a, right? And what you're missing is you're doing the right thing, but you're ignoring other time frames. So you were right here, and you should have been right here, so on and so forth. Unfortunately, you were wrong here, and you were super wrong there, right? So your fractal geometry breaks down. You got it? So if I were me, I would suggest starting on the high time frame, not starting on the low time frame. But I know you're going to ignore me, and you're just going to start on the low time frame, and you're going to find mediocrity. If you're really good at technical analysis, you'll find mediocrity. Because some of the time you'll be right, some of the time you won't be right. It'll be really hard to discern. You're just on the wrong time frame. Pound Aussie. Which one are you bullish on, Robert? Which one are you bearish on? I'd never look at my open trades. Why would I do that? I have stop losses. Maybe on Saturday I'll move some stops. I like on Saturday because then I can't freak out. Markets closed. Bull pound. So are you a bear, Aussie, Robert? You can give me 3 reasons why you're bearish on the Aussie dollar. You could say, well, if you read the RBA meeting minutes, if you look at their import-export data, right? They're running a current account surplus, blah, 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 blah. Yeah, but see, I could argue right off the bat, Robert, if you can't give me 3 reasons, I don't want to look. Because the technical analysis is probably wrong. So, should Australia be running a current account surplus or a current account deficit? Well, they're an exporting country. They export natural resources. So countries around the world send money to Australia. It's a surplus. The United States runs a current account deficit. And I've told you, the media freaks out about all this stuff. Everybody's wrong but me. That's why we're friends. The media's wrong. Oh, look at the deficit. Great, great. Look at the deficit. Oh, the dollar's weak. It's the end of the world. I'm like, dollar's weak? It's because Americans are so filthy, stinky rich. They're buying crap from all over the world. They're buying Italian and German cars. They're buying stuff from China. They're buying stuff from Taiwan. They're buying stuff from Japan. They're buying stuff from South Korea. They're buying stuff from Brazil, and they're going on trips. And dude, the dollar's weak because Americans have so much of it. We're drowning in money, and we're sending it to everybody. Money. Here's some money. The world is drowning in dollars. Yeah, that's good. That's good, brother. Right? It's a good thing. So, yeah, global macroly speaking, things are fantastic when the dollar's weak and we're running a current account deficit. It's fantastic. So anyways, so the United States runs a current account deficit because we buy more stuff from foreigners than we sell to foreigners. Australia sells more stuff to foreigners than they buy. Right? Like how many German cars does Australia import? Now they have Mercedes and BMWs in Australia, but I think they're made in Australia, right? But how many do they import from Germany? How many Lamborghinis and Ferraris are imported from Italy? There's only 25 million people in Australia. Okay? But how many countries around the world need iron ore and coal and wheat and beef and wine and bad movies? Right? Everyone. Yeah. So you see, like, they sell a lot more stuff than they buy. Australia has a lot too, so they can make their own stuff. They can consume their own stuff. They don't need to import a lot. You want a Mercedes van? They make them in Australia. Oh, they're beautiful. They're just not very good. See, I know I can generalize, and it's all right. Yeah. Cat data bad. Yeah, let's move on.com. Cat data bad, 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 bad. Of course, that's an interpretation, right? Bad CAD. Think that's bad? All right, well, someone's going to buy it. And they're going to buy it right there. Why? Well, yeah, but beyond that, because they're bulls, sure. But when was the last time we had a lower low? I mean, you could draw this, couldn't you? So again, I'm not saying you're right or wrong, and the news is good or bad. That's your interpretation. Everyone has the job. It's actually your job to read the data and make an interpretation, right? All we know that some people got out of positions and some people got into positions, but what about, like, shouldn't you as a bear wait for something like this? Right? Or have been sort of ready for this? See, what an amateur often will do is say, because of this news and because of what just happened, they should sell at the weekly central pivot in something that's still technically up. That's a 4-hour chart. You get what I'm saying? Someone that sold that is not in control, unless they sold it pretty close to up here, right? But even then, so I could see, like, a bear would want to sell this because that's a fib, right? But you know, I think the safest sell, if I'm a bear, is this, not this. What's the difference in price? About the same, 0, 0. Yeah, well, only times, right, PJ says. But what's the difference in risk? Yeah. Anybody have an aha moment? Just my kids and I used to do this one. My wife's like, would you guys stop that? Sure, Mom. I guess I got to do it this way. Sure, let me do it again. Use matches this time. Yeah. So anyways, boom. Same price, less risk. That's kind of what you're supposed to be doing, right? No, my kids whine a lot. They're kids. Well, I teach them to actually say it, but the question is, there are ways to say it, right? So like a child will just say it, like, this sucks. I mean, they don't say it that way, but like, this, I don't like this, this tastes bad, or whatever, right? This is bad. And now it might be obvious to everyone, and that's fine. I don't want to teach my kids to keep their mouths shut, because the world is full of people that don't do anything. So why would I want to produce 2 more, not, you know, 2 more sacks of DNA that do not contribute to GDP or the social welfare of society, right? So you gotta communicate, but as you mature, you learn that there are different and better ways to communicate, so that the dumb people don't get upset. Yeah. Oh yeah. No, I'm a bit honest with my children. A bit. A little bit. So my wife's going out of town this weekend, and she's like, so I've arranged for this dinner. All the kids are going to be super happy. They're going to have all their crap food. I'm like, crap food? If I'm in charge, I'm feeding them crap. Oh, it's their favorite food. They're so super excited. Like, I don't care about their feelings. We're not going to eat that crap. I'm not going to cook what they want for dinner. The hell? What are the kids in charge now, right? So no. I'm going to take them to the grocery store. I'm going to give them $20. And I say, go find us some food for dinner tonight. And we all eat for that $20. I want protein. I want it to be healthy. And it needs to taste good. I'll just be hanging out by the Starbucks. Try to get her done in 20 minutes or less. That's Dad. And I won't even shop with them. Like, yeah, just scream if the bad guy comes along. If not, I will wait in the Starbucks. You do the grocery shopping. And by the way, you're hauling the bags to the MDX. You load them. I'll drive. That's cool. I'll drive. So, anyways, that's a plan, guys. And what if that doesn't work? You know what? Then I suppose you should have bought it at support. Well, oh, but the news. Oh, the people on CNBC. Oh, the blah 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 blah. Yeah, Peter, that's the best family car ever made. Best family car ever made. In fact, when I bought it, it had perfect marks. It was perfect in everything. Like, it's in a Consumer Report. It scored 100% in every single, like, all 45 categories. I'm like, yeah. Yeah, well, things have changed, right? Yeah, now you buy a Tesla and stuff, right? Oh, it's an Acura. It was a great story, too, because I go in the dealership, I buy it brand new, it had every upgrade they have. Every one, which means nobody can afford to buy the damn thing, right? Right? It comes with a mariachi band, but you have to feed them, right? So anyways, so it's got everything you could possibly have, right? But nobody wants to buy it because it's so damn expensive. And so the new ones are coming in, you know the old story. Oh, we you know. So I go in and I bought it in cash for less than the used ones were selling. I'm like, America! All you need to know is supply and demand, guys. It's like, really. It was like the last one sitting on the showroom floor. Too expensive. Nobody wanted it. The new ones are going to come in. Everyone wants the new one. Nobody wants the one from, like, oh my God, like now. How much? Ah, gee whiz, I don't remember. But I do remember, like, looking them up on eBay. Like, that same year model. It was, right, that same year. I'm looking them up on eBay Motors, and I look at the used price. You know, used meaning they had 5,000 miles or something on them, right? And then I go in the dealership, and offer significantly less than that. And they're like, and I'm like, guess I should buy that Cadillac, huh? And I grab my money back. And they're like, no, 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 no. I'm like, no, the new Cadillacs are cool. It's a 6-cylinder, but when you're not pushing the engine, it's only running on 4. That's really cool. Maybe I'll get that one. Yeah, in fact, yeah. And they're like, no, take her. So anyways, whatever. I don't know. But supply and demand, like, so, you know, I'm actually in, I don't have my textbook in this room. I'm in an economics class again. It's classic, right? I love it. So you're learning about elasticity, right? I'm sure you've taken classes like this. You know, it's a review for most. But then, you know, there's complementary goods and substitute goods and all that kind of stuff. So, like, when was the last time you bought vodka? Do you know they don't even have good vodka? You can't make good vodka. You can make bad vodka, but nobody like has like, look at this vodka. This is a 20-year vodka. This is an 18-year-old vodka, right? No, the vodka is supposed to taste like water. So you either have bad vodka or vodka, right? So you go in the store, and there's like, in America at least, there's 50 different vodkas. So you could go in there and say, if there's a vodka for $20 and another one for $25, how many more of the 20s do you sell than the 25s? How, right? How much does that $5 matter to vodka? And you can calculate the elasticity and stuff. So anyways, what I'm trying to get at is, you can live in this world that we talk about in Forex all the time, about supply and demand, macroeconomics, microeconomics. It pervades everything in my life. I have a story about everything I ever bought was a micro or macroeconomic event. Right? Yeah. But like in the worst part of the financial crisis, you know, I bought a very expensive Mercedes. I think it was the $120,000, but it was a few years older. So, you know, it's worth like 80 or something, right? I'm driving to the dealership and the dealer is shaking his head. Well, actually, I bought it from the dealer at the dealer's home, and he's just shaking his head. He just can't believe it. 80 something $1,000 car. I paid $27,000 for it. And he was like, oh my God, I can't believe this. And I'm like, yay, I got myself a Mercedes. Paid cash. Nobody had money. He was happy. He was so desperate for money because his life was falling apart. He was going to lose his house. The dealership was being sued. He had all these cars. Nothing was happening. Things are like he was just desperate for cash. That's economics. He had 5 people come out and try to buy that car. They couldn't get financing. There was no financing. Banks didn't finance. The credit market was still frozen. I probably helped the guy save his house. He had a beautiful house. Oh my God. He had 12-foot ceilings in his bathroom. You're like, damn, nice house. How much do you want for that $85,000 car? So I said, well, I'll give you 25. And he's like, oh my God. So I kicked him an extra too. But you know, it's supply and demand, it's macroeconomics, it's financing, it's credit, it's all this stuff. And it's fluid and it changes. And it's as real on these charts as it is in the streets. It's in the same way. People buy coal the same way you shop for vodka. You're like, well, I like Australian coal. It's fantastic. And then, you know, but I gotta bring it home, so I gotta get a ship, and you can track all this stuff. And it's really interesting. And money crosses borders because let's say someone in China goes to Australia, strikes a deal, writes a contract, buys a bunch of clean coal from Australia. Then they have to go to a port and hire a ship and have the whole thing transferred and put on a ship and then have it taken all the way back to China. You could track the supply chain. This is where Baltic Dry Index comes in, right? And you look, yeah, Tito's is great. Okay, but you know, like Robert, so like Tito's, because I actually bought vodka last night, right? So you got Tito's, which is American, and then Absolute was like about $2 different. Baltic Dry Index, okay? But then you're like, okay, Absolute's good, but then the other American one was Sky vodka. I don't think Sky vodka is considered a bad or cheap vodka, right? So you have Tito's and Absolute about the same. So what are sales like? Do people want American? Do they want Swedish? Whatever, right? But then over there, for $8 less, you can get Sky vodka. Okay, and then you could get bottom shelf $8 less than Sky, and they're like, that might actually be bad. So, you know, but this is a very interesting thing. And now you could start creating slopes for demand curves, and then figure out the elasticity between comparable and substitutive, and then say, well, what are income levels like in the United States right now? And when the income level goes up because the economy is improving, and the demand curves shift, does their tastes and preferences change because now they want better vodka? And when the demand curve shifts to the left because incomes are down, like let's say 8 years ago, what kind of vodka were people buying? And where on the slope are they? And how does the elasticity change? This is cool, but you could do this with oil. You can do this with gold. So it's just great, like every decision. And you forget, like, well, what do you mean oil? Well, what if you were running a factory? Do you know what I mean? And you needed oil. All of a sudden, somebody's like, you need to go out and buy some oil. Well, where are you going to get your oil from? And what refineries? And is oil prices going to go up in the future or down? Should you buy a lot now? Should you keep your powder dry in case prices come down and then you buy a whole bunch? But then if you buy a whole bunch, you got to ship it and then you got to store it and then there's carrying costs and oh my God, you know, time value of money and interest rates and you're like, oh, the future orders that are going to come in for your business. You're like, Sam, I need to do some finance stuff, right? And you suddenly you're doing calculations. And all of a sudden you're like, wow, but this is the whole world does this. And this affects currency prices. The same way that we talked about the Fed raising interest rates and when the stock market's going to fall, and not like some stupid textbook rule of thumb. We talked about like why the stock market falls, when it will fall, and why, and you're like, oh my God, Wayne, that makes total sense. It's easy. It's common sense. Well, that's the better answer, right? And this whole idea, like the stock market's going to fall because interest rates are going up, that's what amateurs say. Unfortunately, most of the amateurs have suits and ties, and they're sitting at a wealth management firm somewhere, and they have an MBA, and they're like, hey, man, I only make $200,000 a year, but you're a millionaire, and I want to manage your money for you, and you're going to pay me to put everything you own into an ETF that just tracks a sector. I'll get you into a sector spider. I'll only charge you 1%, and I'll make you. And you're like, wow, this dude has no idea what's going on. And why do rich people hire poor people to manage their money? I've never understood that. Right? The young guy at Merrill Lynch makes $47,000 a year, never had a real job in his life, has a cheap suit and tie on, and you're having him cold call millionaires to manage their money? Like, dude, Who managed grandmother's pearls, right? So, talk about these things, and it'll blow your mind, right? Those guys talk about, oh, the stock market, right? Stock market's going to fall because the Janet Yellen's going to raise interest rates. Yeah. Now let's talk about Trump. Wow. Did you see the PE ratio? You know, we were talking about that yesterday. Oh, stock market's going to crash. Did you see the PE ratio? Wow. Blind leading the blind, huh? So anyways, if you're going to sell, make sure you're not selling an upward move. If you're going to sell, make sure you sell at resistance, because if you're wrong, you'll lose less money. You're going to be wrong a lot, so you might as well be wrong in small chunks. So if you're going to sell, sell high. Don't sell after the news. Oh, the news was so bad, so you're going to dump this, and you've forgotten that you're sitting on support. Look at this, guys. Sitting at support. You'll say, well, Wayne, here's a double top. There's the role reversal. Okay. Let's sell here. Sure. Sure. Yeah. Sure. Yeah, if you want to do it that way, great. Guess we have too many lines now. Or you just let it break out, you catch it next week, one way or the other. If you're having trading problems, feel sorry for you, son. I got 99 problems, but a pip ain't one. Hit me. All right, let's move around. So, oh yeah. Oh, this goes back to Wednesday's conversation, I believe. I think we were here. We said you can't buy it. Oh yeah, pushing the horse. No animals were injured or emotionally disturbed in the making of this trade plan. All right, so you can't buy it here, but you can consider it here and here. Is that right? So you're making money, right? And you avoided losing money, right? Cool. And here's the thing. When we do this and we're looking at stuff like this, right? You're thinking there's no way in hell it's going to come down here, right? After this ginormous move, hundreds and hundreds and hundreds of pips, you're like, there's just no way. Oh, but there is. And what causes such things? People did exactly what they were supposed to do. See, it's supposed to do it. Do you remember this whole speech about predicting the future? I mean, that's predictable. Isn't it? So it's actually this one here. This is more unpredictable. But this is predictable. Do you know why? I'll prove it. That red zone was made on Monday. That's it. That red zone was made on Monday. That's where you're supposed to take profit. I named this, by the way. I don't know if anyone else calls it. Probably not, but I don't know. So again, I haven't read other people's stuff. I called it, I named it the pivot profit zone. No one ever had taught me that. I never heard it from anywhere else. I think it was sitting in a Pete's Coffee in San Mateo, California. One next to the Whole Foods. It was brand new. This is 2006, 2007 maybe. And I'm sitting there and I'm like, because I'm writing the book. I mean, like, it's a real human wrote that book. I had to spend hours and hours and hours and hours. And I already knew what I wanted to write, but then you actually have to write it. So I'm sitting in the Pete's Coffee, because I'd rather die than go to a Starbucks. And I'm in the Pete's Coffee, and I'm like, well, what do I call this area? Because this is where I tend to get out. And I need to make this clear. That it's a target, not necessarily an entry. It's always a target, but not necessarily an entry. And I sometimes it's M4, sometimes it's R2. Why don't I shade that sucker in and we'll call it the pivot profit zone? Right? Like, this is where this stuff comes from. I'm not as smart as Gerald Appel. I don't do things like, well, this is a moving average convergence divergence indicator. And then someone else said, well, that's too long. Why don't you call it like a MACD? Somebody's like, it takes too long to say MACD. Why don't you just call it MACD? Yeah. But BBC. So I don't know. If anyone else has ever called it a pivot profit zone, if you went to another webinar somewhere over the years and someone called it pivot profit zone, I know I invented that. I know for a fact. I just told you the story. Remember what I was, remember what I was doing. I can tell you the seat I was sitting in. But anyways, I'm old. Nobody cares. Wayne and his war stories. But anyways, we did this together on Wednesday. I might have said probably Friday. And the reason you can predict it's Friday is it probably take a whole day to drop that far. Okay? But anyways, do what you got to do, bro. So that's interesting. Aussie, you know, Aussie is Aussie. We didn't do pig. So we did this whenever. How many days ago now? 1, 2, 3, 4. So this was Monday. You buy it here, or you buy it here. So you had the chance to buy it Monday, Tuesday, Wednesday, and Thursday. Okay. And that was at what, 34.50? And we're at 35.80. Is that right? 34? No, 30. I can't. Honestly, I can't see that. 35. Let's call it 35. Let's call it 35. So we're up 75, 80 pips. Well, Peter, if you're still a bull, you buy at support. You could do it here, 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 or just walk away and wait for the breakout. So on Monday, we had this as the potential resistance. So if you were a bear, you could sell here, 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 or here. My message was, if you're a bull, you buy low. If you're a bear, you sell high. This is how you range trade. Also, you can use an oscillator. You don't use moving averages. Insert, indicator, oscillator, stochastic. 3, is that right? 5, 3, 3, no, 8, 8, 3, 8. What is it supposed to be? 8, 3, 5? Oh, look at that, terrible. Let me just change it then. No oscillator. Let me change it again. Let me just go to a basic setup. FX bootcamp standard. All right. If you got a problem, yo, I'll solve it. Bum 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 ba-da-dum bum. Bum 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 ba-da-dum bum. Bum 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 ba-da-dum bum. Bum 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 ba-da-dum bum. All right. Where's the easiest ones? All right. Okay. Are you okay? Is it over? It's overbought here. Are you at resistance? No. No trade. You're overbought here. Are you at resistance? Let's do it this way. Okay. You're overbought here. Are you at resistance? No. No trade. No, Are you at resistance here? Not quite. No trade. There's only one sell using the oscillator method on the hourly chart. Okay. You're oversold. Are you at support? Yes. Okay, so your buy is right here. Are you oversold? Yep. Are you at support here? Yep. There's a buy there. And it's right there. So there's one sell and two buys. Thank you, Craig. Craig's got my back. Stop, collaborate, and listen. Ice is back with a brand new invention. Something grabbed a hold of me tightly, flowed like a hot boat daily and nightly. Will I ever stop? Yo, I don't know. Turn out the lights and I'll glow. Wow. And he didn't even write the tune. Here he goes. It's like the dog chasing his tail, like, oh, here he goes. So, yeah, we started pretty late, so I don't know where we are in time in the webinar. Let's just do one more. What would you like me to cover? Oh, by the way, is anyone else doing the training courses? I think the coupon code is dying. It's dying sometime soon. Monday is too late. So does anybody need information in regards to that? Yeah, was it Rocket Man or Rocket Boy? I think it was Rocket Boy, wasn't it? It's pretty funny. It's just remarkable what Trump says. Okay, yeah. Oh, go to the training course at fxbootcamp.com. There's a swing course, and there's a fundamentals course, um, and there's a coupon 382, 38.2% discount. But you have to call TradersWay, who will confirm you have a live trading account. And if you do, they give you the coupon code. So they're basically giving you a scholarship. Pound Kiwi, really? All right, for Marina. Again, I think you've asked this before. I don't think I even have a pound Kiwi chart. No, I have a Euro ZAR. All right, pound Kiwi, huh? If you got a problem, I'll solve it. Pound Kiwi. Pound Noki, pound Kiwi. All right, cool. Which one are you bullish? Which one are you bearish? Pig bull, but you're not necessarily bearish on Kiwi? All right, so that bugs me a little bit, but so be it. Is that too many lines? Can at least get rid of the volley bands. Going to try to clean up my chart a little bit for Marina. Okay, what type of trade are you looking at? All right, so bullish to neutral. That's good. Bullish pig. All right, so we're bulls. We want this to go up. Cool. What type of trade? Long term, medium term, short term? It's a little muddy. Long term, short term, scalp. Oh, short term, daily going long. You bought at 78. What is it now? Oh yeah, well, okay. If you're swinging it, you're fine. So let's zoom in 78. $1.78. All right, hopefully you caught it on the retracement. I mean, obviously your target's going to be here, right? So you're probably worried about maybe like a pivot in there. Let's just throw down monthlies, weeklies. Should we be worried about a weekly M3 at the end of the week? I don't know, probably not. We were supposed to make a higher high here though, right? And so the other thing is the Kiwi is gaining strength. So your neutrality is probably needed to change. And that occurred recently, right? The change in Kiwi. So I think that's what you're facing here. So yeah, it is a difficult one. But you know for sure it's bearish if it breaks below here, right? And that takes you down to what, 82 and some change, 82. So yeah, you're risking hundreds of pips still, right? But we don't care about that. If you're using this 4-hour chart, you have to ask yourself, technically, when is the uptrend over? Is it the double top or is it the lower low? Okay. Well, that's your answer. So you're saying double top. That's fine. You can take your profit, and if it turns north at the pivot cluster here, you can buy back in. Right? And there's no doubt, like, so on this time frame, there's a low, there's the high, so you're supposed to have a higher low, right? Not a lower low. So for Marina, this has already occurred. So your time frame analysis is just different time frame than me. Okay? So if I was still a bull and I was using the 4 hour, so I said, well, there's not enough to get me out. I want to stay in. Okay. Well, then on this time frame, I would assume the consolidation, and then eventually the breakout. I guess I got to go farther now. Okay. If I was a bull, that's what I would assume is going to happen now on the hourly chart. Okay. So you could jam your stop like here. Find the psych level, maybe just below it or something, and just say, look, you're going to lock in. You're going to lock in probably about 700. Well, you just make sure, Marina, it's not an emotional decision. Okay? So that's why I started with, what's your definition, right? Is it a double top or is it the lower low? So just have a very clear definition. What are your rules of engagement? Stay in until a double top or stay in until a lower low? And also, in your analysis, okay, in your analysis, is the top predictable, logical, obvious? Is it hardcore resistance? There's my monthlies. Monthly. Okay, there's monthlies. Let's see them here. Weekly. 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 Daily. Let's get rid of daily. Let's switch templates here. Let's do the clusters. I guess that's easier to see. All right. Well, all right. So here's another thing. Here's another thing to add. We don't know up or down, right? But what we do know is that if it wasn't the month of September, I would have gotten out at 164.26 or whatever that is. I can't even see it, sorry. 184, I guess, right? 184 and some change. It would have been done for the month. I would have been done on the 14th. Okay, so all of this is luck, but it's luck because it's September. Okay, so now you really have to question, you know, if these bears are serious, shouldn't we be down at weekly M1 right now? Okay. So maybe you get lucky, Marina. So if you want to play it that way, you could say I was supposed to get out at this price anyways, and you gambled a little bit, you stayed long, it's paid off. As long as you're above that, you're golden anyways. Maybe it turns around and goes north. I don't know. 4 hours says down for down, like down, right? The moving averages say sideways. At the very least, you're going to be in a range, and the range is lower than where you should have gotten out anyway. So you could have been done for the whole month and spent 2 weeks, you know, clubbing in Ibiza or something. Well, be careful. Define on paper, like actually write some rules of engagement. Make a contract with yourself. How do you identify the end of a trend? Is it the double top or is it the lower low? And by the way, if you'd taken profit, you wouldn't have faced this challenge in the first place. Yeah. So it's not easy. But I faced a similar problem, I think about the same time on the CAD yen. I was at the monthly target and the weekly target, and I was really upset because I made all that money early in the month. It was the middle of the month. I'm like, we hit the monthly target, but I'm also at weekly target. Like, I know for a fact that's resistance. So what did I do? I said, I think there's 1,000 pips left in this trade. What do I do? Yeah, I took profit. Let's get back in later. It's like so simple, right? Like, yeah, well, I'll just buy the next dip. I mean, it's clearly resistance, right? So I'll buy the next dip if I think there's 1,000 pips later, right? Yeah. So anyways, I think we probably got our time in. Peace on earth. May the pips be with you. May our profits be above average. Sorry for starting a little bit late. Life was challenging. Then I thought I'd make it fun, and then, fun always gets punished. So thank you very much for being clients. Throw your diamonds in the sky. Thank you very much. Traders Way. Traders Way. Thank you for being a client. Remember those coupon codes. See, I think 6 people asked for them last Friday. I delivered them on Monday because I was too busy over the weekend, and I think 3 people signed up. So I don't know where all these other people are, but whatever. As long as you're happy, I'm happy. As long as you're improving, I'm happy. As long as you're making money, I'm happy. And if you're struggling for profitability, I'm here to help and guide and push and prod and hug and slap and anything that you need. Okay. So have a wonderful weekend. Okay. And I will see you on Monday. Cool. I'll stop the recording, but I'll leave the chat open a little bit longer in case people have questions about those coupon codes, because they are going to die, and that's it. After that, gone. Cheers.